Hi everybody, welcome to the complete MBA course. Today we will learn about some of the main summary accounts that a business has, and I hope you find them interesting because you're gonna see hundreds of them in your career. So let's go. There are many different types of accounting summaries, but I'm gonna show you the four most important ones. The first one would be aging summary. This one is just a rearranged accounts receivable that helps you identify when payments are due. You will need to keep a close eye on this account because it helps you identify when your business is at risk of running out of cash. Let's check an example so that you find out how do they look like. I made you this table here, which is an example of aging summary, but is very much simplified. As you can see, aging summaries usually have a set of columns that explain when a customer debt is due: 30 days, 30 to 60 days, 60 to 90 days, etc. And then in the rows you have the different customers. For example, here we see that our customer field P has to do a big payment before 3 months of €500. Well, I hope you got the idea because now we're going to do a small exercise based on that. Imagine that your accountant has created the previous aging summary. Knowing that your company has fixed costs of €100 per month and €100 cash in the bank at the beginning, what problems do you identify? Let's see. You know that you start with €100. You know also that at the end of the first month you get €50 in payments. So in reality you will have cash of €150. However, you know that you have fixed costs of €100 per month, so you have to subtract €100 there. You will therefore end with €50 in your cash account. So now the second month you start with €50 and you get €30 from your customers. This is €80. Now, however, you have to think that the fixed costs come into play, and now you have to subtract minus €100 again, ended up with minus €20 in your bank account. The business would run out of cash, which is a very important problem in big companies. The interesting part here is that the aging summary is showing you that this business was very successful. Just 1 month later, you would have gotten an input of €1,100, but one single month without a cash in your bank can make any business fail instantly. So think about that. Now we can go to the next summary account. The Cash Receipts Summary, or CRS, it's a summary that compares the cash in your bank with the changes in your cash account. It's best if we see how it looked like with an example that I made you here. Well, you can see that the first two columns are self-explanatory. Every time there is a change that affects your cash account, you'll have to put a new line. Now the first column after that is the bank, which should just show the actual cash that you have in the bank at every moment. You know that you can check that very easily, so it's very easy to note that. The columns after that are the cash debit and cash credit from your accounts. This is the in and outflows of your cash. The rest ones are all other accounts affected in the transactions that you're noting. Usually you may have many other accounts, but here I only put 4 to make this example a bit easier. So well, now that you know this, let's make an exercise. The previous cash receipt summary belongs to a startup. What's wrong with it? So as you can see, I made something fishy here and I wanted us to check it together through the numbers. The first thing you should realize is that the final bank number, which is 600, does not correspond to the cash debited minus the cash credited totals, which equals 700. There are therefore €100 missing. Where is that money? So let's find it out. The first line shows that investors put money on our company and received stock in exchange. That's why the cash account is debited, and we see 500 euro in our bank, and the new stock account is credited with 500 euro. Until here, everything looks normal. Let's go to the second line. Here, our first client, Anna, debited cash for 200 euro and created revenue. So our bank went from 500 plus 200 euro to 700. The third line is showing dividends that were paid to investors. We can see that the cash was credited for 100 euro, but the bank dropped from 700 to 500 euro. This is a 200 euro fall. Here there is something fishy, as there were 100 euro used that were not written in the books. Someone needs to respond for that. So I hope that you can see the great utility of this account. Now we can go and check other ones. I'm going to explain the last two ones in a general way because they tend to differ a lot from company to company, and you only need to know what they are about. The first one is the general ledger. This is a list of all transactions taking place in all journals during an accounting period. It's usually made available at any time for the government to check. The other one is the fiscal year balance. This is basically the company's yearly results. It's calculating subtract expenses from revenues. And the result is the net profit. These numbers will be presented to the government under the profit and loss report, which we will learn in another video, and will set the taxes that your company has to pay. So that is for today, fellas. Remember to subscribe if you like my tutorials, and if you're doing an MBA, check out the comment section in the links below for my book. It's the only one for now with the complete exercises and theory to pass a top-notch MBA. So thank you all for watching and see you in the next video. Bye bye.